Coming up on the SBS On The Money podcast, chocolate prices this Easter, how the markets reacted to Donald Trump's address, and the latest interest rate pricing. All of that and more next. Hi everyone, welcome to the SBS On The Money podcast for this Thursday, the 2nd of April 2026. It's a day where the Australian share market fell, the S&P ASX 200 down 1.1%. We'll have the details with Matt Wacher from Morningstar Australia in a few moments as we go into more detail of the top consumer finance and market news stories covered during On The Money on SBS World News. But first, a bit of news from us. The SBS On The Money podcast has been shortlisted as Best Money and Business Podcast at the inaugural Australian Audio Awards. The winners we announced on May the 28th, so fingers crossed for us. But it also means you're listening to a good thing, so thank you for streaming this podcast. Okay, let's get some news now. With Easter around the corner, many shoppers may be experiencing the bitter effects of the price of chocolate. In fact, the Bureau of Statistics says the cost of snacks and confectionery have risen dramatically in the past few years and up 6.6% over the last 12 months, driven by chocolate. A lot of it had to do with soaring input prices, namely cocoa, which hit a record high in 2024, but it's come down since then. So why are consumers still paying elevated prices? To find out, I spoke with Tim Piper, the head of confectionery sector at the Australian Industry Group.
What the prices now are reflecting those prices from 12 months ago, the cocoa prices from 12 months ago. What's happened since then is the cocoa prices have reduced slowly, but many of the products that we are seeing in the market now, we're using the expensive cocoa.
What are some of the ways manufacturers have tried to minimise the impact on consumers?
Manufacturers have tried to minimise the impact on consumers as much as they can. This year, there's probably more people in the marketplace, more companies in the marketplace manufacturing for Easter right across the board, whether they're Australian or whether they're imported. But they've got different styles. They've got smaller amounts. They've got larger amounts. They've got more economical brands. So right across the board, they've tried to make it easier for consumers to buy, and that means offering so many differences than they have seen in the past.
So a consumer would look at this and think, though, that chocolate packages might be getting smaller, or there might be fewer chocolate pieces within, say, an Easter egg brand. Is that right?
Well, what manufacturers have done in most cases has given consumers the option. One is to continue with what you getting, and therefore prices have increased not insignificantly. Others have been to reduce the numbers, reduce the amount of product or cocoa and chocolate in the product. So therefore it might mean you get lower prices as a result of that. So we've been reflecting what the consumer wants, either to keep prices to a bare minimum, the increases to a bare minimum, or accept some of the increased pricing and therefore get exactly what you were getting before.
And I guess cocoa is just one input, right? There's lots of other different input costs. Maybe can you explain what they are and how does cocoa compare? Is it the largest input cost into the price of chocolate, for example?
Putting it to a very contemporary position at the moment, we're now looking at increased fuel costs that are enormous, 80% or more that are coming from the cocoa, for example, that has to be imported. So that's a really good example of where it's not just the cocoa prices, but it's fuel, it's logistics, it's the costs generally that will cause cocoa to increase in price, as it will other ingredients. It might be sugar that has to be transported. And indeed, what you said about cocoa pricing, it's a major part of any chocolate. The more cocoa in a product, the more expensive that's going to be if the cocoa prices go up. So cocoa is always going to be the major part of any chocolate that we manufacture.
And finally then, and you touched on it earlier when you said, given that the cocoa prices come down from those record levels in 2024, do you expect chocolate prices to come down, even though we are seeing these other pressures like those rising fuel costs?
If I knew what the price of chocolate and cocoa was going to be this time next year, I'd be buying a Tass Lotto ticket, that's for sure. Because there are so many variables that we have to take into account. And it's not just the price of cocoa, because, we could set a price of cocoa and it might be maintained. But with the current situation we've got, we know we've got to pay for additional fuel, which will be enormous. And there will be ramifications across all sorts of food, not just chocolate. So this time next year, it's anybody's guess as to what our pricing is going to be, whether it's chocolate or food in general. Consumables are going to increase in price.
That's Tim Piper there from the Australian Industry Group. Let's take a look at the Australian share market now, where the S&P ASX 200 ended the shorter trading week lower. Remember, it's closed tomorrow and Monday for the Good Friday and Easter Monday public holidays. The index down 1.1%. It took a turn at lunchtime after Donald Trump's address to the nation. Tech stocks were up before that speech, but ended down. In fact, the sector was the worst performing on the 200 today, along with materials. Gold stocks in particular were hit, along with healthcare. Utilities and consumer staples rose. That oil price is higher, now at 107 US, and the Australian dollar closing the day at about 68.73 at the market close. For more, I spoke with Matt Wacher, the Chief Investment Officer of Morningstar Australia. Matt, so we've had a series of addresses to the nation around the world over the past 24 hours. Anthony Albanese yesterday here, the US President Donald Trump this afternoon. But after Trump, the market actually lost ground and turned negative. Run us through the market reaction. I guess, why didn't they like it? And what do investors want to hear from Trump to regain confidence?
Yeah, that's certainly been the case. There's certainly been a lot of news flow over the last 24 hours. And I think the issue for markets, firstly, is that the information that we heard over the last 24 hours hasn't really been new. It's kind of rehashing the old talking points. But even more importantly, from the speeches from President Trump and to a lesser extent, the Prime Minister last night, they've not given the markets really any certainty about the direction other than what we already thought we knew. And so, as you know, markets, they crave certainty. And these kind of wishy-washy speeches haven't really helped markets work out, where they should be headed. And of course, President Trump, again, threatening to destroy all of the Iranian oil and energy infrastructure assets. That's not great for markets at all. But really, I'd say the primary thing for markets is they favour certainty. And in this kind of environment, if they're not getting that certainty, they're going to sell off. And that's what we've seen this afternoon.
Donald Trump did say that higher gas prices in the US, though, is short term. Does the market believe him? And would it be similar in other parts of the world, like in Australia? Are those price increases likely to be short term?
Yeah, potentially, I think, well, firstly, on the evidence that we've seen lately, the markets probably take President Trump with a little bit of a grain of salt with what he's saying, probably waiting for some of the hard evidence to come through in terms of oil prices and how this conflict's going to play out. I think in other regions, the US obviously has a lot more oil that they can deploy, their own energy assets, much more than Australia or certainly parts of Asia. So potentially be less hard hit. It really comes down to how long the hostilities are going to last in Iran and the Middle East, and how long oil markets can come fully back online once the hostilities have ceased. But having said that, the futures markets, the derivative markets out there for oil, they certainly show that the closer months, the April and May contracts, they're priced much more expensive than the latter months from kind of June out. And so the markets, or at least that one data point, is showing that you're seeing some sense that this isn't going to go on forever and that there might be light at the end of the tunnel. But that's just one data point.
So if indeed these increases in gas prices are short term in the US anyway, does it mean the market will continue to expect interest rates in the States to potentially come down later in the year? And then at the same time, Australian interest rates, it just seems more and more economists are penciling in not just one more rate rise, but two rate rises here.
Yeah, I mean, I think that well, what it really means, this crisis, is that inflation is again really front and center in investors' minds and central bank minds for that matter. And you saw kind of interest rate cuts being priced out of the market in the US to some extent, and as you say, more interest rate hikes to come here in Australia. I mean, the RBA having already taken action, you've seen consumer confidence dive, you've seen housing prices come off the boil. And I guess the key issue for both the Fed and all global central banks, including the RBA, is how many rate hikes that consumers could actually take before they really cut back spending, and an inflation shock turns into kind of a growth shock or even a recession. And if that occurs, I don't think that would be great. A recession wouldn't be great for equity markets, but it will probably mean that you might get this short period of very sharp rate rises. That would be, if we had another 2 rate rises in Australia, that'd be 4% in a short period of time. You might see that reversed pretty quick smart in that kind of recessionary environment. But this is all speculation at this stage. We need to see an end to the war before we see what happens with oil prices.
That's Matt Wacher there, the Chief Investment Officer of Morningstar Australia, and he wraps up the podcast for this Thursday and for this week. Remember, it's a public holiday tomorrow, Friday, and on Monday. If you enjoyed it, give it a rating or a review and subscribe. Don't forget you can watch On the Money during the 6:30 weekday edition of SBS World News on SBS. The podcast returns on Tuesday. It drops after the market close every weekday, and I will catch you then. This SBS On the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.